Property and casualty initial licensing. This is going to be Chapter 15, crime insurance and bonds. Crime insurance is going to be added to a CPP or written on a monoline basis. It's going to have a deck page that's going to cover all the following things. Again, in this case, if a limit or premium are not shown, there is no coverage, just like on any other policy we talked about. So the first section here is going to be for employee theft and also known as employee dishonesty. Second section is going to be forgery and alteration. Third is going to be inside theft of money and securities. And inside refers to inside the premise. We'll go over these in a second. Inside robbery or safe burglary of other property outside the premise. Computer fraud, fund transfer fraud, and money order and counterfeit paper currency coverage. So a couple definitions that we need to go over here at the beginning. Custodian, this is any person that has possession of a property inside of a premise. A messenger, this is going to be a person that has possession of property outside the premise. Remember, theft is going to be defined as any unlawful act of taking that is without the owner's consent and includes the crimes of burglary, robbery, forgery, and other crimes. Again, burglary is going to be theft from inside a premise. Visible evidence of forcible entry or forcible exit is required for the insurance to cover, but the entry is not required, so you can reach in through a broken store display window and still have that as evidence of the forcible entry and have the coverage. Robbery is going to be defined as theft of property in possession of a person. It involves always a face-to-face confrontation and requires either violence or the threat of violence, but an actual weapon is not necessary in a robbery. Employee dishonesty insurance. So this is going to be covering losses from theft of money or securities or other property by employees. In this case, the police must be notified in the event of a loss or a claim will not be paid. One additional condition is that coverage is automatically canceled on any employee when the insured discovers, aka learns of, the employee that has been involved in a dishonest act at anywhere, anytime, whether or not the act occurred prior to employment. So there are 3 schedules for employee dishonesty insurance. The first schedule is going to be a name schedule. This is going to be specific names like John Jones, Mary Smith, etc. Position schedule, this is going to be for certain positions like clerk, cashier, manager. And then the third schedule is going to be the most expensive, usually not used, which is going to be all employees. Note that there is no such thing as a named position. If you see that, that is made up, Mickey Mouse, not real, and not to be chosen as an answer. Forgery and alterations coverage. This is going to cover worldwide for any loss of money resulting from forgery or alteration of outgoing checks or drafts or promissory notes by anybody other than employees. Inside theft of money and securities inside the premise is going to provide coverage for loss of money and securities from inside the premise or banking premise resulting directly from theft, disappearance, or destruction. Inside the premise, robbery or safe burglary of other property is going to provide coverage for loss or damage to other property inside the premise resulting from an actual or attempted robbery of a custodian or from a safe or vault that is inside the premise. And then inside robbery or burglary of other property, this is going to cover the loss of other property because of burglary. In this case, again, you have to have the visible evidence of forcible entry or exit required for the claim to be able to be covered. And that is the end of the extent of generally what they test on crime insurance for the Texas insurance property casualty initial licensing for general lines. Now we're going to talk about bonds. Bonds are not insurance, right? Just one thing to make sure to say right from the outset. Yes, we're giving you a license here, or getting you prepared to get a license for insurance, but this also allows for you to be able to be licensed to sell these bonds, even though they're not insurance. So there are 2 types of bonds. There's surety bonds, which are guarantees of performance, and fidelity bonds, which are guarantees of honesty and trust. Now, there's three parties to a bond contract. The principal, also known as an obligor, this is who makes the promise to, and the promise is made to the obligee, also known as the insured. This is the one that takes the promise from the principal or the obligor. And the vehicle in which they enforce the promise is through a company called a surety or a guarantor. This is who is backing the promise that was made financially. Now, if you do not hold up your end of the bond, right, then the process of suretyship, which is a penalty payment that is made for breaking the bond promise. So this is going to be something that is not typically expected to be done. Bonds are not expected to pay out. So in this case, they do not want that to happen, and generally don't expect it to happen. Okay. So the example of who may be whom in these situations, a school district could be an obligee that's requiring a contractor that would be the principal to complete a building by a specified date. Say maybe they got school coming up and they need a new school building. So in the case of this situation, the principal or contractor would purchase a bond from a surety company, also known as a guarantor, for a specified amount and would be payable to the school district in the event that the contractor was unable to meet the specified deadline. Right? So the bond is guaranteed that if the principal defaults on the contract, the surety will be financially compensating the obligee. The surety guarantees that the outcome will occur as contracted, and if it does not, the bond will pay the financial consequences to the obligee. But unlike insurance, the principal is responsible for reimbursing the surety the amount paid under the bond. The obligee has the right of first recovery against the principal, and the surety has the second rights through subrogation. Okay. So understand that you may have a situation in which the insured or obligee needs to make sure that something's going to happen on time. Say that school district wants to look at several different contractors to do that, or several different principals. So they may go through a process of what we call a bid bond. And a bid bond is just a guarantee from the surety or the guarantor to the principal and to the obligee, therefore, that if the obligee awards the contract to the principal, that the surety will issue a bond to that company so that the process can go forward with a bond. Performance bond, another name for this, is called a completion bond. Understand that there is such a thing called a payment bond. This would be typically used for transfer of ownership from a general contractor to a owner of a property after the property has been completed, to ensure that the labor and materials will be paid and not transferred over to the new owner and stay with the general contractor. Other types of bonds that we're going to be talking about here will be court bonds. The party that is seeking the remedy is called the principal, and the party against whom the action is taken is the obligee. In a fiduciary bond situation, this is anybody that's entrusted with the property of others, like the executor of a will, for example, would require a fiduciary bond. A bail bond. In this case, the obligee is going to be the court. The principal is going to be the accused that is supposed to show up at a specific time and place, and the surety is going to be the bond company, right? So if you don't show up at the time or place, then the surety is required to pay money to the court, and the only way they get the money back is if they make the principal show up, and then they can get recompensed on the bond. Certain municipalities do require, or certain types of businesses do require, license and permit bonds. Things like notary publics and certain trades and certain municipalities need these to ensure compliance with the codes. And then the last part here is going to be fidelity bonds. These are guarantees of honesty and trust. In this case, the obligee is the business, the principal is the employee, and it protects the business from larceny of the employee. Generally, the employee will not know that the employer has purchased this contract. And again, this isn't true crime insurance because it's a bond, not insurance. All right, so we've got some questions that we're going to go over in this section here. Number one, in a retail business, all the following situations could be considered theft, except A, merchandise being stolen with evidence of forced entry. B, a clerk witnessing a customer shoplifting merchandise. C, a clerk being robbed at gunpoint. Or D, the store's year-end inventory coming up short by 5%. Number one's answer is going to be D, the store's inventory coming up short by 5%. That is not going to be considered theft. Number two, the employee theft provides coverage for theft of money, securities, and other property by employees. There are 3 schedules available. They include all the following except. So what is not a available schedule for employee theft coverage? Would it be A, a named schedule, B, a named position schedule, C, a position schedule, or D, a blanket coverage? In this case, B, a named position schedule is Mickey Mouse made up, not real, and is the incorrect option available. A, C, and D as all employee or blanket coverage is all going to be options that are possible. Number 3, the 3 parties to a bond are going to be A, the principal, obligee, and surety. B, the obligor, the principal, and the surety. C, the principal, the obligee, and the obligor. Or D, the insured, obligor, and the principal. In this case, it is A, the principal, obligee, and the surety. All the other ones have duplications if you look at the alternate definitions for each. Number 4, a bid bond A guarantees that if the obligee is awarded the contract, the obligee will furnish a performance bond. B guarantees that if the principal is awarded the contract, the surety will furnish a performance bond to the principal. C guarantees the lending institution, the supplier, will furnish the material to the bidder. Or D guarantees the work will commence on schedule. So a bid bond is defined as B, guaranteed that if the principal is awarded the contract, that the surety will furnish a performance bond for the principal. Number 5, a performance bond. A guarantees the obligee that the principal will complete the contract as agreed. B guarantees the principal that the obligee will complete the contract as agreed. C guarantees the principal will be paid by the obligee on time. Or D, none of the above. Okay, in this case, this is guaranteeing that the obligee will, that the principal will complete the contract as agreed. Number 6, which of the following must be true in a burglary? A, property must be taken from a custodian or a watch person. B, there must be no evidence of force or violence. C, the burglary must involve acts of a convicted felon. D, there must be unlawful entry or exit from the premise with visible evidence. Okay, for number 6, this is D, the unlawful entry or exit with visible evidence is required in a burglary. Number 7, the judge orders a person under arrest to post a bond or to be released. What is the person under arrest called? A, the obligee, B, the bailee, C, the surety, or D, the principal. So in this case, under number 7, the person under arrest is going to be called D, the principal. This is the accused. Number 8, the employee theft coverage would pay in which of the following situations? A, the store owner knew an employee who stole from the store had shoplifted before hiring them. B, a manager was robbed of a bank deposit when away from the business premise. C, the burglar entered and left through an open skylight. D, the insured refused to notify the police about an employee theft. So the only one that could pay out would be B, a manager that was robbed of the bank deposit when away from the business premise. The other ones would not be able to be paid out. The first one wouldn't be able to be paid out because they knew about a dishonest act before hiring them. The C would not be able to be paid out because there is no evidence, visible evidence of entry or exit there for the burglary. And D, it is required that employee theft be notified to the police to be covered. Number 9, a person that is desiring to be a notary must secure which type of bond? Would it be A, contract, B, judiciary, C, license and permit, or D, fiduciary? In this case, it is a license and permit bond for a notary. And number 10, a fidelity bond protects in which of the following situations? A business owner from a shoplifter, B, an employee from a robber, C, an employee owner from a pension fund mismanagement, or D, a business owner from an employee theft. This is only going to cover in the following situation of a business owner from an employee theft, D. All right, that's the end of the section, chapter 15 on crime and insurance and bonds. Now we're going to move on to workers' compensation, chapter 16. So originally, it was a lawsuit between a injured employee and their employer if they got injured on the job. There were several common law defenses that were put in place that the employer would use to prevent the employee from being able to collect on any of those claims that they were making. So in this case, the fellow servant rule, this is talking about when somebody says, hey, Johnny can do the job without getting injured, so why can't you do the job without getting injured? That is what the fellow servant rule is discussing. The other ones, contributory negligence, assumption of risk. Hey, you knew what kind of job this was prior to getting into it, so you took on the risk knowing that the job was going to be dangerous. So those types of things were successfully used by employers originally, and therefore a lot of employees would not put through these lawsuits because they weren't likely to be successful with this. So they realized that a system of benefits needed to be put in place to protect workers in the early 1900s. The laws were primarily elective or optional at first, allowing them to pursue the case outside of the workers' compensation law or to use the fixed benefit remedies provided under the law, also known as the statutory benefits. And so compulsory laws, which are going to mandate that the exclusive remedy was to be provided under the workers' compensation law, was later enacted by almost every state. This established a form of absolute liability that required the compensation for injured workers regardless of their fault or negligence. So some states nowadays require you to purchase the insurance through the state's plan. These are called monopolistic states. Outside of that, those monopolistic states, you'll buy these plans through private insurance companies or insurers. Employers are going to pay the premiums to cover their employees, and the state's going to provide the benefits under workers' compensation. Employees are going to be defined by what they do. So most independent contractors will qualify for workers' compensation benefits. The tests that they're going to ask are going to be if the employer exercises control over the person performing the task, if the character of the work being performed is consistent with the nature of the business, if the person is paid a wage or some other type of compensation by the employer, if the business has the right to hire or fire the person, or if the business furnishes the materials necessary for the person to perform their task. You're generally going to be considered an employee for workers' compensation purposes. Now, there are exemptions to workers' compensation, right? So in Texas, this is going to include some farm and ranch workers, casual laborers, domestic employees, those that are day laborers, and employees that are already covered under federal workers' compensation insurance, and any newly hired employee that rejects coverage within 5 days of being hired is also going to be exempted under workers' compensation. Now, Texas is the only state in the country that still has what we call an elective law, meaning that you do not have to have workers' compensation insurance in the state of Texas. However, the employer does lose those common law defenses, and they are required to register with the Division of Workers' Compensation, DWC, which is a division of the Texas Department of Insurance. Now, these policies are broken into two parts. Part one is going to cover workers' compensation. Part two is going to be employer practices liability insurance, EPLI. And part one is going to be split into 5 subsections. The policy, this is going to be the information or deck page. Number 2, who is the insured? Number 3, the workers' compensation law that's in effect. Number 4, the state. Number 5, the locations within the state. Other states' insurance, you're going to get automatic coverage for new or incidental operations in other states, excluding those monopolistic states, for them on an automatic and temporary basis, for subject to certain conditions and time limits. Benefits that are covered by workers' compensation. They're going to cover medical benefits. This is going to be any injury covered by workers' compensation is entitled to all healthcare reasonably required for the injury and paid immediately. Benefits are based on the nature of the injury and continue as long as deemed medically necessary. Therefore, they can be theoretically unlimited or lifetime benefits. There are no benefits paid for pain and suffering, mental anguish, or cosmetic surgery solely for aesthetic purposes. Income benefits, disability income replacement is going to be paid on a weekly basis to replace a portion of the wages. They're going to look at the average wage that you were earning for the 13 weeks prior to the injury. And the benefits will not start until the 8th day, meaning that your first week of benefits are going to be paid actually on the 2nd week, and then on the 3rd week, you're going to get paid back for the 1st week and for that 3rd week. And then it goes back to a schedule for 1 week at a time from that point forward. The insurance carrier under death and burial or survivor benefits will pay death benefits to the legal beneficiary if a compensable injury to an employee results in a death. These are paid weekly, and there is no waiting period. If the death of the employee results from a compensable injury, the insurance carrier will pay to the person who incurred the cost of the burial, the lesser of the actual cost incurred, or up to $10,000. The second or subsequent injury fund was enacted by Texas, which is funded by unclaimed death benefits maintained by the state, which are paid for a maximum of 364 weeks or 7 years. These funds are designed to pay for any additional benefits that may be required when an employee with a previous injury or disability, whether work-related or not, suffers another injury that causes disability to be more serious than if there had been no prior disability. So an example here, workers' compensation will not pay for this, so this is why this is necessary. An employee with only one arm loses the use of a second arm, the resulting disability would be much worse, usually resulting in permanent total disability. And without the second injury fund, the employers would be subject to the additional liability imposed by such injuries and would not have any incentive to hire the disabled employee. Vocational rehabilitation. So this is covered by the state of Texas, but it is not part of workers' compensation. This is available to anybody getting supplemental income, gets referred by the state to retrain and get them back to work sooner if they can retrain them on a different type of skill or job. The payment of benefits are going to be no later than 15 days after the insurance carrier receives written notice of an injury. The carrier will begin the payment of the benefits. Work-related versus non-work-related. So a lot of times on the state test, they're going to ask questions about what is and what isn't covered by workers' compensation. So any bodily injury and occupational disease arising out of or during employment is going to be covered, but no ordinary diseases like flu, COVID, diabetes, stroke are going to be covered by the workers' compensation. Other excluded things from an injury standpoint is going to be any injuries that occur to and from work, even in a company vehicle, are not going to be covered by the workers' compensation. Any act of God is not going to be covered by workers' compensation insurance unless, for some reason, the employer put that employee into further harm's way by their actions. Workers' compensation is not going to cover in the case of intoxication. So the first thing that happens usually on workplace injuries and accidents is they're going to test you for alcohol and or drugs, because if they can find that you have those in your system, then they will be able to exclude that and not pay it out. Any self-inflicted injuries will not be able to be paid out under workers' compensation. If you've ever had to wear safety glasses at a work site, you know this. Any willful failure to follow safety precautions will be a cause for them to exclude the injury. So if you forget to put those glasses on and you do that several times and your boss writes you up for it, that reason for them writing you up for it is to establish a pattern so that they wouldn't have to pay just in case you got injured because you weren't wearing your safety glasses. Activities that are not part of the job are not going to be covered. So if you got any voluntary games or anything like that, like a three-legged race or something like that on the side of the workplace, even though it's on work property, is not going to be covered because it is voluntary. And then any injuries that are caused by third parties are not going to be able to be covered as well. This is situations like a spouse coming to visit their husband at work, or domestic violence type situations, somebody just going crazy, going postal. Terrorism events are not able to be covered under workers' compensation as well. Statute of limitations: the employee must notify the employer of an injury no later than 30 days after the date of which the injury occurred. They do have up to a year to file the claim, though. Legal beneficiary has 1 year from the date of the claim to date of the injury to file the death claim. The employer is required to report the injury to the insurance company and the insurer within 8 days of being notified. Premium determination is going to be for based on the nature of the business, what type of business they are, and they're going to have a job classification rate for each $100 of payroll, and it's going to be adjusted by modification, experience modification factors, and if the total goes over $5,000 monthly. The experience ratings will raise up or down to encourage employers to create that safe work environment. Part 2 of the workers' compensation policy is going to be for the employer's liability. It's going to cover things that are not covered for people that are seeking damages outside the workers' compensation laws. The most common types of situations that are going to be covered with this part are going to be exempt employments. Back to who's an employee. So if you had somebody that wasn't allowed to be covered under workers' compensation, they could be making a claim, but you would be covered under employer liability. It is possible to unknowingly have an illegal employment, either a minor or somebody that doesn't have proper work authorization, like an illegal alien. There can be a lawsuit brought for loss of consortium that is not paid out by workers' compensation. Loss of consortium is the ability to make sexual congress or intimacy with your partner. And if you cannot do that anymore, you can sue for that. And that can be covered not under workers' compensation, but under employer's liability. And then in the case of a intentional unsafe contact by the employer, gross negligence, you can have a lawsuit for that, and that can be covered by employer's liability insurance. All right, so time to go through review of this section. Number 1, if an employee had been injured and impaired at a previous job, benefits under workers' compensation for injuries at a new job are partially paid for by whom? A, the employer's health insurance; B, the insurance commissioner; C, the Americans with Disabilities Act; or D, the Second Injury Fund. In this case, it's going to be D, the Second Injury Fund. Number 2, who pays the premium for workers' compensation insurance? A, employees; B, employees and employers and employees proportionally; C, employers; or D, the Workers' Compensation Board. In this case, this is going to be just the employers. C. Number 3, which of the following benefits are not paid under workers' compensation laws? A, medical costs; B, mental anguish; C, physical rehabilitation; or D, disability income. In this case, it's going to be B, mental anguish. Number 4, in Texas, workers' compensation laws apply A, to most employees, except for those that are specifically excluded by law; B, only to employees in hazardous occupations; C, only to employees who work full-time; or D, to no employers. So in this case, the correct answer is going to be to most employees except those specifically excluded by law. A. Number 5, in Texas, workers' compensation coverage is A, compulsory, B, required, C, elective, or D, reciprocal. In this case, elective is the most correct answer. C. Number 6, when an injured employee can only be paid under workers' compensation, it is called A, indemnity, B, medical benefits, C, exclusive remedy, or D, compulsory. In this case, it's going to be C, exclusive remedy. Number 7, who may have a valid workers' compensation claim? A, an employee who was injured getting out of the car in the company's parking lot. B, a wife who was injured while visiting her husband's job site. C, an employee who had an epileptic seizure on the job. Or D, an employee who was injured in a car accident while driving to work in a company truck. So A, an employee who is injured getting out of a car in the company parking lot. The key here is being on the company parking lot, and that would cause a valid workers' compensation claim. B, the wife visiting would not have coverage. An employee who has an epileptic seizure, you can put in heart attack, a whole bunch of different things here, things that are natural to the and not caused by the employment or by the work at the job. Would not be able to be covered under workers' compensation. And then injured in a car accident, D, while driving to work in a company truck. To or from work, even in a company vehicle, is not covered by workers' compensation. Number 8, an injured employee must notify his employer within how long after the injury to receive their benefits? A, 24 hours, B, 8 days, C, 30 days, or D, 1 year. So number 8, this is going to be 30 days. Number 9, all the following benefits are covered by workers' compensation in Texas except A, burial expenses up to $10,000, B, training for a new job, C, unlimited medical bills, or D, loss of income payments. So not covered by workers' compensation, but covered by the state of Texas is B, training for a new job. And number 10, generally to receive compensation for work-related injury, a claim must be filed by the injured employee within A, 1 week of the date of the injury, B, 1 year of the date of the injury, C, 1 year of the date the disability ends, or D, 2 years of the date that the disability ends. In this case, it's going to be B, 1 year of the date of the injury. Number 11, under workers' compensation law, income benefits may not be paid for an injury unless the injury results in disability that lasts longer than A, 48 hours, B, 1 week, C, 1 month, or D, 1 year. So they will begin after the first week is completed on day 8. So B, 1 week is the correct answer here. Number 12, which of the following statements regarding workers' compensation insurance is not correct? A, all employers domiciled in Texas are required to obtain workers' compensation insurance for their employees. B, workers' compensation provides compensation to employees who are injured on the job without regard to fault or negligence on the part of either the employer or the employee. C, workers' compensation protects the employer from its negligence. D, workers' compensation's primary advantage for the injured employee is that it provides a quick and certain means of compensation. All right, so number 12, this is going to be A, because this is an elective law in the state of Texas, the only state in the country where it is still elective. Number 13, which of the following is not an injury that would be covered under workers' compensation, by workers' compensation? A, workers that are injured when a hydraulic lift collapses. B, an injury that occurs when an employee slips on a wet floor while changing clothes in the employee locker room. C, an accident that occurs while an employee is driving a forklift from a truck to the warehouse. Or D, an intoxicated employee cutting himself with an electric saw. Because of the intoxication, D would not be an injury that would be covered by workers' compensation. Number 14, an employee covered by workers' compensation is entitled to all the following healthcare services for an injury except what? A, cosmetic surgery solely for aesthetic reasons. B, physical rehabilitation. C, hospital care. D, first aid. A, cosmetic surgery for aesthetic reasons will not be able to be covered under workers' compensation. Number 15, what is the workers' compensation burial benefit for a worker killed on the job? A, $5,000, B, $6,000, C, $7,500, or D, $10,000. So the maximum benefit for burial is going to be $10,000 or the actual cost, whichever is lesser. Number 16, an employer must report an injury to the insurer within how many days of the employee's report of the injury? A, 5 days, B, 8 days, C, 15 days, or D, 30 days. For number 16, this is going to be B, 8 days. Number 17, the length of time for which an injured employee will receive compensation, workers' compensation benefits depends on which of the following factors. A, the employee's average weekly earnings. B, the nature of the injury. C, the employer's payroll. Or D, whether the employee has any dependents. So the length of time is always going to depend on the nature of the injury, B. And number 18, which of the following is not a common law defense available for injury to an employee? A, the fellow servant rule. B, contributory negligence. C, an act of God. Or D, assumption of risk. So of those listed, 3 are common law defenses and 1 is not. The one that is not is C, an act of God. And that ends our workers' compensation section.